What's going on, Patreon? Welcome back to another post-market analysis. We're going to go over the market this morning for March 22nd, 2024. Overall, not very eventful today. Kind of like yesterday. Not very eventful, really. But this morning we talked about these prior daily lows, how we took those out, and we wanted to see a overall continuation to the downside, right? We were in the TGIF, where Monday, Tuesday, Wednesday, and Thursday we seen higher prices. So coming into the marketplace this morning, right, for Friday, we wanted to see a pullback back into this big bullish imbalance here from FOMC. So we want to see a pullback this morning back into the FOMC imbalance and gaps that it left. So that was the overall sentiment this morning coming into the marketplace. Coming into the H4 here, we have that big BISI here, this big bullish fair value gap, and we mark them out in quadrants, right? We have the opening of the fair value gap, 25%, 50%, 75%, and then the low of the fair value gap. We wanted to see this morning price action come down into the 25% of this fair value gap here, right? Making this an overall, right, 27 point day, right? Very easy target, very simple, right? The least amount of effort. And we also had this H1 nested fair value gap inside of the 25% level of this H4 bullish fair value gap. So overall, this area right here was our drawn liquidity. We wanted to see price action reach down into it. And coming into the marketplace on the M15, we had this M15 bearish fair value gap, which was also a smaller time frame fair value gap inside of this H1 bearish fair value gap. So overall, this morning we're anticipating right price action to pull back into this bearish fair value gap to then see that continued move to the downside, right? Down here into this liquidity pool after we got, I'm pretty sure we came higher this morning, right? We took out this Asia session high. We came higher, took out those Asia session highs, right? Total soup, take out those Asia session highs before we then seen this drop lower, breaker structure to the downside. So we're anticipating the pullback into this fair value gap, right? To then see the move lower into our drawn liquidity, which was this inefficient, right? Which was this inefficiency, right? MMXM model, super clean, right? Very good trade idea. Everything was solid, but unfortunately this morning we kind of consolidated here and kind of went back and forth. So we did short at the opening here of this bearish fair value gap, and we eventually scaled in right after we came back up here and then seen this massive move to the downside. We eventually scaled in. Our order was like right here, so 5 points. 1, 2, 3, 4, 5, so 99.75. So about right here, 99.75. So this is where we scaled in and we moved our stop loss back above this high. Actually, 5 points would be up here. So yeah, this is where we scaled in 52.99, 5350. So yeah, this is where we scaled in for 5 points, aiming for that 3 to 1 R, 15 points back down into that liquidity pool that we are talking about, right? Back down into this inefficient higher time frame level. Right, we shorted up here, wanted to see it come down here, and we eventually took the trade off at break even, right here at 105. Seeing how the Nasdaq was pushing higher. Overall, we did have a heavy divergence this morning where the Nasdaq was pushing higher, and the Dow Jones just seen, oh my gosh, the Dow Jones was just pushing lower and lower all morning. But the Nasdaq was consolidating all morning, refusing to go lower, despite the Dow Jones wanting to go lower and pushing the market lower. The Nasdaq was just giving us a headache this morning and refusing to go lower, and it didn't actually start going lower here until the PM session, where it, I think it came up into this H1 bearish fair value gap and then started to see the move lower. So overall this morning, Nasdaq was really giving us a headache, right? Seeing the Nasdaq push higher and then the Dow Jones push lower, right? The Nasdaq was giving us a headache. It was not refusing to go lower. It was refusing to go lower, I mean, and price action was coming back on me here, so I just took it off at break even instead of, right, anticipating Nasdaq to drop here because we never really know, right. I didn't necessarily know when Nasdaq was going to finally give up the ghost and start moving lower, which it eventually happened the last about the last hour of trading, right? As you can see here, last hour of trading. We finally got that move to a downside here. But unfortunately, that was the last hour of trading. I'm pretty much done trading. So throughout the entire day, we kind of just consolidated back and forth, came lower, then we reversed higher, and it wasn't until the last hour of trading that we saw the harsh move to a downside. So that's unfortunate, but that's the reality of trading, right? Not every single day are you gonna get an opportunity, right? Yesterday we didn't really get an opportunity during the AM session at all, and now today the AM session did not. It gave us an opportunity, but it didn't give us what we wanted to see. From high to low, this was a 15-point range. Like my take profit was 15 points. So the entire range is literally my take profit. So this was very low volume, very low volatility, and when we're trading, we want to be in volatile market conditions, right? When we're getting the most, right? It's about getting the most out of the volatile conditions, right? So it's about during days like these getting out at break even, basically losing nothing, right? I didn't make nothing, I didn't lose nothing, right? I made a little bit. So it's about during the bad days where there's lackluster volume, lackluster volatility, keeping the losses or wins, right? Or, wins at break even and losses very small, right? During these bad days and during the good days where volatility is there, volatility is entering the marketplace. It's about maximizing on those winners, right? Maximizing on those winners when the market is giving you, right, the volatility and the volume that you need in alignment with your overall trend, right, that you're anticipating for that morning session. And during morning sessions like these where it's going back and forth, it's about limiting the risk and, right, having the least exposure, right, losing at the least as possible, right. And the reason why you lose as least as possible is so you can focus on the next day, right. It's always about having that next day mindset, right? Focus on that next day, right? During lackluster days like these, my goal is to conserve my capital, make sure my losses are small as possible. So for tomorrow, I can have the capital I need to, really go hard if the market is giving me the opportunity that I wanted. So today, today a lot of you know, to today a lot of signatures was good, right? The dollar was pushing higher this morning. The Dow Jones was pushing lower, right? We had the turtle soup plus the bearish fair value gap plus the targeting. Everything was good. The only problem was the Nasdaq was consolidating all morning and then it reversed in the lunch session, and that really messed us up the entire day. So, it is unfortunate that we didn't get the volatility that we would like to see. Usually Fridays there's some type of volatility there during the AM session, preferably, right? But coming into the market today, we didn't get that volatility. If we enter the this from high to low, today was a 24-point range, right? A 24-point range compared to FOMC, right? Over 70 points, right? So very low volume, very lackluster. It is what it is, right? We kept our losses small. So coming into the market on Monday, right, we can really capitalize on, the opportunity if it presents the volatility that we like. So coming here into the dollar, we talked about how we wanted to see a continuation to the upside on the dollar here, based off of yesterday's reversal, and we got that exactly here. Dollar reaching back up into its liquidity pool, and um, overall, the dollar The dollar just yeah, the dollar overall just reversing here. We did talk about how it was, gonna reach up into these highs. It did so. It is still inside of this inversion fair value gap. So, right, it's important to be cautious of that. It's still inside that inversion fair value gap, but so far, looking at the dollar here, it's looking very, very strong, and we could potentially see higher dollar, which hopefully seeing higher dollar can, really push the S&P 500, the index markets lower. We've already seen the Dow Jones make that move lower this morning. Right now, we're waiting for the S&P 500 to catch up and the Nasdaq to catch up, which we can expect that to happen on Monday. So on Monday, for the index markets, we want to see that move lower here, especially on the Nasdaq, for it to really catch up to the Dow Jones, because Dow Jones is down over 400 points on the day, super clean day today for the Dow Jones. So we want to see the other markets correlated to that catch up with it. Right, we've seen the dollar overall breaking above that FOMC right low. Wednesday here we saw that push lower. Yesterday we got a big reversal past it, breaking above it. So, hopefully on the Dow Jones here we can see that continuation to the downside, breaking below those FOMC imbalances and really, seeing bearish prices coming into the index markets next week. For the Forex pairs, we talked about how we wanted to see, euro reach down into this bullish order block. We would see the euro reach down to this bullish order block, and looks like it is happening. So we're anticipating, right, continued lower prices here on euro. Right, GBP has reached down into that bullish order block, so we want to see euro reach down into that bullish order block as well. So, right, continued lower prices on euro as long as the dollar continues to move higher. Right, yesterday we got that reversal here on the euro, and today we've, kind of consolidated a little bit, and then eventually got that push to the downside around 10 o'clock. Around 10 o'clock, we eventually got that push to the downside here. Right, low fair value gap here, which we did reach up into before then dropping down here for, 19 pips. So Euro saw a little move this morning, and GBP kind of saw a little move this morning as well. Very consolidated day. Not much effort by the markets at all today, which is unfortunate, but that's how trading is. But on gold here, we saw that reversal yesterday on gold, and we were talking about how we wanted to see gold reach up into those prior daily lows. It did so exactly. And we talked about this bearish fair value gap this morning, right? We reached up into that bearish fair value gap this morning, and we've rejected from it, and gold has been moving lower since from it. So if you guys did trade gold this morning, or you guys trading gold and you saw that pre-market analysis this morning, gold has reached up into that, right, H1 bearish fair value gap. We saw that move to the downside. Right, seeing that move to the downside, break a structure. You could have took a short here, stop loss above this high here, right? As price action taps into that fair value gap and then leaves it, right? I'd probably take a short here as it's breaking lower with stop loss above that high, right? Because as price action taps into that PD array and leaves it, hopefully price action doesn't want to revisit this high, right? Targeting, right, probably back into this fair value gap, actually a 2-to-1. Let's get a 2-to-1 R. Right, targeting back down to this order block and eventually down into this low and maybe even into low of day, right, for a 3-to-1 R for a day, which should eventually reach around PM session. So that's the, MMXM model today for gold, right? We talked about how we wanted to see a reach back up into this bearish fair value gap. It did so exactly. Pretty sure there was an inversion fair value gap. Yeah, right here, look. It came up into this bearish fair value gap, rejected it. Look at this inversion fair value gap. Right, I just made a video on this on YouTube, the inversion fair value gap model. Came up into that bearish fair value gap, break through it, inversion fair value gap, short here, stop loss above this high, right? Could target, inside this fair value gap, this low, and even low of day, right? Super clean, really clean actually, like really, really clean. So, right, just overall MMXM model example, keeping it simple, coming up into a bearish PD array, break a structure at downside, right? Inversion fair value gap right here to then take a short, an opposing liquidity pool. Plus, the dollar was going higher, so you have that added confluence, right? When you see the dollar going higher, gold is going lower, so you have that added confluence with it. So seeing the dollar going higher, we've already reached up into this H1 bearish fair value gap. We've already seen the break lower. I'd be more than confident, 10 times more confident taking this short inside of the inversion fair value gap for sure. For sure. So, that's what's happening today on gold. And we could maybe say the same for Euro and GU, seeing it reach up into this high for a total swoop before then breaking to the downside, right, and eventually dropping lower as the dollar was reversing higher. So today on the S&P markets, no break-even day. It didn't reach our objective, which we thought was very reasonable, very easy, but that's just how it is. We kept our win super small. So when we come into the market Monday, right, we've preserved our capital and, we can, capitalize on the opportunity with whatever Monday presents, right? It's about preserving your capital during the trash days and then during the good days, really maximizing on those winners, right? It's about really, really maximizing on those winners and then cutting your losses short during those bad days because these consolidated days, they happen and everyone tends to lose during these type of days, except like super scalpers. They're just back and forth trading. But real traders, traders who trade, trade, for a living, right? Who's day trading, right? Not super scalping back and forth, damn near gambling, right? These type of days are typically very, very trash, and it's about limiting the losses, right? Limiting the losses as much as possible so you can focus on the next day, right? Because it's easy to get bunched up in this, right? It's easy to get lost in this consolidation and try to trade every single hour, right? It's easy to get lost in this and then lose your account, right? A lot of people lost their accounts today trying to trade this, back and forth, and pushing it. A lot of people lost their accounts today doing that. And you've probably lost your account today or in the past trying to day trade or scalp days like these where it's just not giving you an opportunity. Like there's no opportunity, right? And it's about understanding that there's not an opportunity today. I'm gonna walk away. I'm gonna walk away with a small loss or break even so that when tomorrow comes and there is opportunity, I'm not, you know, I haven't blown my account. I still have my account, so I can really maximize the next day because even though today may have not presented opportunity, even though yesterday may have not presented opportunity, tomorrow could present a great opportunity. It could be very volatile, and if we blown our account today, we wouldn't have seen the amount of success we will see tomorrow. So, right, it's about capital preservation during the trash days and maximizing your winners on the good days. So, that's about it for the week. Monday, Monday was a little tricky, a lot of divergence, kind of like today, but eventually it did simmer down and we did see the slow move lower. Tuesday was really good. Tuesday was really good. We really maximized on that Nasdaq win, making over making over a 4R 3.5, making over a 3.5 R on that Nasdaq win. So killer, killer, killer. We ended that day with about a 2R, right? Because we did lose on the ES initially, so that 3.5R really ate up this loss. And then uh, did we lose on? Yes. I'm not sure if we lost on. Yeah, we did lose on Monday. Oh yeah, we had took a small loss on Monday. We took a small loss on Monday, and then we won big on Tuesday, right? And it's just about right during the trash days, right, days like this where it's just back and forth, consolidated, right? It's keeping the losses small. We kept losses small this day, and then the next day, look, right, big move higher, big moves, big moves, big moves. We capitalized on this, right? We capitalized on it, and we made over a 3.5 R this day. So we kept this loss small, and we capitalized big on this day, you know. And then yesterday we didn't trade. Wednesday was FOMC, and then today break even. So that's just you know that's just some risk management, and psychology there. So I'll see you guys next week.